So we've been talking about non-traditional loans, and we're going to go into our second episode where we take a deeper dive into self-employed. And in case you didn't know, there's a lot of options available for that self-employed borrower. So I'm back today with Stacy Flanigan, and we are going to take a deeper dive into these products. Thank you, Stacy.
Thank you for having me. I appreciate it. Love being here with you.
So you have some great options for those self-employed borrowers. But before you get started, I wanted to just kind of mention a little bit about what I go through in a traditional mortgage when I look at a self-employed borrower.
Yes, please.
I have to go through 2 years of tax returns. I have to take a really deep dive into what those expenses are that they write off, and most of them have very good accountants.
Yes.
And they write off a lot, which is what their accountant is supposed to do.
They're doing their job.
They're doing their job.
Yes.
But then when it comes back to my side of it, I'm looking at that bottom line income and, oh, they don't really qualify.
Yes.
So how can you help?
I can actually help you a lot in that department. So we see this a lot where borrowers, like you said, once you look at their tax returns, they might only be able to afford a $250,000 house after their bottom line. So with that borrower, as long as you've been self-employed or 1099 for 2 years, we can use the deposits going into their bank account, whether it's their personal bank account or their business bank account. We're looking at their deposits going in each month, average it over a 12 or 24-month period, and that's what we're going to use for their income. So that increases their buying power quite a bit. So if you're looking at their tax returns after all their write-offs and they can only qualify for, let's say, a $250,000 house, I look at their deposits going into their bank statements, they might be able to qualify for a $500,000, $600,000, even $700,000 house. So that buying power increases tremendously for your borrowers.
So Stacy, what about the expenses? Because that's their deposits, but we all know there's expenses that come out of that. How do you consider those?
Yes, so it depends on what they do, the business that they're in. If they're 1099 real estate agents, for example, they don't have a whole lot of expenses typically. So we can go all the way down to a 15% expense ratio, which means we're going to use 85% of the deposits. Now, somebody that owns a couple of brick and mortar retail stores and has, 10 employees, that might be somebody that's going to have like a 50% expense ratio. So really, we're going to look at what they do, how many employees do they have, not their own payroll, but how many employees do they have besides themselves? How many locations do they have? Do they work from home? So we'll apply a default expense ratio of 50%. If that works, great. We continue along with the loan. If we need to use more, then that's when we'll look into the aspects of the business.
So that's a lot more flexible than me looking at the tax return going, well, here's what it says.
Yes.
That's what we have to use.
Yes, absolutely.
So are there any other options for self-employed or 1099 people?
We do have a 1099 program as well, and that program consists of just averaging their 1099 from the last 1 or 2 years along with a year to date. So if we have just a 1 year 1099 from 2021 along with the year to date average for 2022, we'll average those two together, and that's what we'll use as the income after applying the expense ratio. And again, usually with 1099 borrowers, you have a lower expense ratio.
So that's a real big help to give self-employed borrowers, not one, but two potential options to get mortgages, whereas I am kind of limited in, okay, this is what you're showing, this is what I've got to use.
Yes, and the other great thing about these programs, if they have a spouse that's W-2'd, we can use that income as well. So I'm not looking, and nor do I ever want to see the tax returns on that program, but I can use their W-2s and pay stubs for additional income, again increasing that buying power for that borrower. We all know how housing prices are going up or have been going up consistently. So getting into that home of their dreams costs a little bit more nowadays. So having that additional income is something that we can definitely apply.
And having options for self-employed borrowers, because I honestly feel the traditional world doesn't give them much latitude. It's really hard for them to buy. So having these options is just fantastic.
Yes, absolutely.
So Stacy, thanks for sharing that with us.
You're welcome. Thank you.
thank everybody for watching. If you have questions, please reach out to me and stay tuned because next week we're going to talk about investor loans. See you next week.